Hi traders, Adam Ryan here with Optic Trading, and welcome back to another trading tips video. In this video, I'm going to be discussing how to trade the open. So this can be very tricky, very difficult subject for a lot of traders. You know, some traders, they want to wait 30 to 60 minutes before they make a trade. Some want to trade right off the open, which is right. Do you wait for the market to set up, or do you trade right off the open, or maybe even pre-market? Okay, and I'm going to tell you guys that I actually do both. So there's times where I trade right off the open, even pre-market, and there's times where I let things set up and, you know, get a better picture of what's going on and then make my trades. So let's go through both scenarios, and I'm going to list a couple of things that I look for trading the open that's going to help me determine whether I trade right away or pre-market, or whether I let things set up. So first off, where do we open in relation to the previous day? Okay, so do we open out of range, above or below the previous day, or do we open, you know, right in the middle of balance, right in the previous day's range, like right at the close? And that's going to have a lot to do with whether we are active right off the open or not. So if we open within the previous day's range, then generally there's not that much change that's taken place. It looks almost the same as yesterday, right? So it's generally going to be less active because less people are underwater, less people are running for the door, less people are panicking, because there hasn't been that much change taking place. So in these instances, unless something is screaming at me price action wise where I need to enter, these are the times where you're going to want to let the market set up and see what's going on. Okay, now on the flip side, if we open out of range, above or below, then change is taking place. Okay, so people are underwater either to the long side or the short side, and they may panic and want to run to the door. So these are the instances where we can enter right away off the open. We can become very active. Now, not such saying every time you open with a gap you enter. You got to take context in consideration and use your strategy, reading price action, to understand when you're going to enter. But generally, when you open out of range, there's more opportunity off the open. So the next thing you want to look for is the opening type. So if you guys have been following along with my market recaps, and you've seen me talk about bullish and bearish opening types, and what they are is, let's say for example we open here and we push lower right away, we don't even trade back through the open, price just gets directional right away, then that's a bearish opening type. Now if we open here and push higher, price gets directional, we don't trade back and forth through the open, then that's bullish. So the exact opposite. When I see this paired with a gap, then that's something that I want to jump on if everything's aligning with it. So the third thing I want to look at is a couple of types of manipulation. So pre-market manipulation is when I might exit, enter pre-market, as well as overnight inventory squeeze. So if you guys haven't seen my video where I talk about the different manipulation tactics used by institutions, hedge funds, and large traders, I'll leave a link in the description down below so you guys can watch that and get caught up to speed. But the next thing I'd be looking for is an overnight inventory squeeze. So if I see that net inventory is long and we're opening up with a gap higher, and then all of a sudden we have a bearish opening type, then that might trigger me to say, okay, I want to go short right now because we're going to squeeze these guys out of their positions. So if you guys don't understand what I'm meaning by this, don't worry, watch the video on market manipulation. You'll understand what I mean by overnight inventory squeeze. Okay, so what are the instances where I will actually trade pre-market? Because there's two instances where I will enter a trade before the market enters, before the market opens. And one of them is based on pre-market manipulation. So again, if you haven't seen that video, go ahead and watch that. But if I see pre-market manipulation, then I will enter pre-market. The other reason I will enter pre-market is if we're approaching some major level, some long-term support or resistance level, or we're breaking out of balance, or testing a VPOC, something major like that, then I will go ahead and enter pre-market, you know. But most of the time I'm waiting till at least the open, but sometimes I will enter pre-market. So when it comes to trading the open, there's no right or wrong way to do it. There's no, oh, you got to wait time to set up, you know, 30 to 60 minutes, or you can't trade pre-market. There's a lot of traders who have a rule that I do not trade pre-market. And you know, that might help some of you if you don't understand what's going on. But when you understand what's going on, if you see pre-market manipulation or something major happening that you can capitalize on, you should trade pre-market. So I hope you guys have a better understanding of how to trade the open, when you should be active, should you be active right away or let things set up, and this video helps you out. If this did help you out and you do enjoy this video, be sure to give me the thumbs up, like the video, subscribe to the channel, and that lets me know that you enjoy this content and you want more of it, which I am happy to create for you guys. Best of luck with your trading, and I'll see you in the next video.